Hi guys, hope you guys are doing really well. Crazy week going on right now. Markets is like a rocket, like never come down. Going to the moon like that since our last extreme fear that we have a couple of weeks ago using our seasonality and stuff like that. We're gonna go back into them and really to talk about what to do right now. To do with the stock market. Lots of our students already make a lot of money since the last time they bought when we are at extreme fear at that time. They will be like they're so brave, and then when the time comes, they just click the button, literally so brave. That the world has never seen before. But for students who just joined, maybe they just added a little bit small position, etc. But yeah, so some positions, or maybe you just joined, you miss out on the last extreme fields. Like we have another one coming in. You can feel that. Yeah, you can feel that in your heart. You can feel that in your gut, hopefully. And also on top of that as well, yeah, we're gonna talk about some of the traits that we have gone through as well. And yeah, if you send host and panelists, maybe you can answer some of your questions as well. Okay, so last week we talked about some traits, like we send the watch list. The watch list is on a weekly call. Usually we do the watch list for apprentices only on Extreme Fear. And we're gonna change things a little bit. Because for apprentice, yeah, we're gonna change this a little bit so that they always stay invested, especially for the elite apprentices. So we're just gonna change from sectors to sectors. That's what we do for elite apprentices. So we go from AI sectors, we go to another sectors like energy sectors, we go to like financial sectors, just to make sure the money is always flowing. Okay, but we talk more about that kind of later on. So last week we talked about like wing stop, shorting wing stops. If you remember, we talked about the guidance was low single digit. Um, it will used to be flat to single digit. It was a decline. Yes, for the very first time, wing stop. This is the chicken shop, maybe chicken wings. Went down. This is what we talked about last week, and we recommend to kind of short it a little bit. Wing stop. Yeah. So we never really seen this going down like decline like that, and it did decline since we talked about last week, and it's been coming down really nicely when the whole stock market went up since last week. Yeah, using our powerful 8-step trading strategy. Why do we recommend to short this? Because we have never really seen a decline like that. Yeah, if you look at it, yeah, before that was just a flat and single low digit, and now it's a decline. Okay, usually it was growth, and this company kind of stopped growing. Yeah, you always want to grow. You always want to take uncertain steps. And what do we have? Ad hoc. A lot of people can't find it. Let me see if I can find ad hoc. Stock price. Yeah, it's not really there. Cool. Shopify's as well. We also recommend to the short Shopify last week. It's on our recording. If you missed that, might be able to send it to you if you're on the right level of the training. So look, the reason why we shorted that is because the revenue for Shopify gross margin used to be a high 20s. It dropped to mid-20s. So their salary dropped from a high 20s to a mid-20s. High to mid. Obviously, it's a drop. That announced on May 5th. A lot of students already shorted that on May 5th. We're going through that step by step last week. And that is Shopify. Where is it? The last 30 minutes of our session, if you remember. And this last Tuesday, just right there. Yeah, it's been coming down really nicely then as well. So well done, and congratulations for those who give things a try. Yeah, the rest is not so big kind of anymore. Hilton Hotel, a lot some students also did that as well. Um, let's see. Yep, and it went down like that as well, quite nicely then. Okay, so we're gonna talk about some trades at the end of these sessions as well. So stay tight. So let's talk about what's going on with the stock market right now and what is actually going on. Okay, a very normal kind of things usually happen. Stock market is not a straight line like that. So let me just show you. So, no matter what happened to the economic, things always go up big time. So if you hold any index, you want to hold them forever. Okay. So yeah, just write it down. If you hold any index, you want to hold them forever. No matter who asks you to buy or no matter who asks you to sell, you never want to sell your index. All right. But if you own some individual stocks that is a bit crazy, yeah, a bit tricky and crazy, you can sell them out in the dollar cost averaging where you can take 10% profits out, 5% profits out, 3% profits out when we are at extreme greed stage, okay? An extreme greed stage. So if you go to my website, Beng Hang, a lot of the tools are there. So let's have a look. Let's see what stage are we on right now. Mm-mm-mm. Oh yeah, so asking, yeah, so on that, so on, on the trades that we recommend that we place, students make like, let me just see, just open all of these up just to see what's going on. Let's do it one by one. Awesome. Let's see where we are on right now. We are on greed stage now. So I don't know why it's moving so slow. We're supposed to be in extreme greed stage, okay? So we are not, people are not getting super greedy just yet. Yeah, if you remember, the way we do things is we go all in. If you click the timeline, we go all in when we're in extreme fear. This is like the November time. And we go all in during March 30th time, okay? When fear is like below 10, below 6. It went to 6. It actually went to 6, guys. March 30th, extreme fear went to 6. On the week 2 training, if you remember, we say that whenever it's below 10, even below 15, you want to start adding positions on. All right. So lots of students added some positions on. So well done and congratulations. Lots of students printing money there. But if you miss that, that's absolutely fine. Another one is kind of coming in. But just have the regret that you have right now and remember to be a little bit brave later on when it comes because we are very, very close right now. Yeah, very, very close right now. So you can see every single time when we are here, usually market goes up quite beautifully and nicely as well. Yeah, for apprentices, we kind of let you know what stocks to kind of buy here. So you make like big money in a very, very short time. Okay. So that's kind of what happened then. Right now we are reaching like a great stage of the economy, it will be nice to be an extreme greed. If it is an extreme greed, I would be looking to take out some profits on some crazy stuff so to get ready to get into the extreme fear again. So let me tell you how it works. Okay. So let me tell you how it works. So when you sell stuff, you especially for apprentices, you don't just want to sell stuff and you do nothing then. You kind of always want to stay invested, especially once you experience the extreme fear already. Yeah. So once you sell something, you kind of want to pull it back into something. What do you mean? So let me give you an example. Okay. So for example, the last time when we have like crazy extreme fear, which is this March time, the Iran war. So, you can be selling things here, and when you sell it, money always have to flow somewhere. As a hedge funds, as a institutions, you don't want your money to sit down there like that. Okay. Yeah. For apprentices, you don't want your money to sit down like that. You always want to move it to somewhere else. So you move it to another sectors that tends to do well. So during here, we asked a lot of our students to get into Occidental Petroleum, if you remember. And lots of students got in there, the energy sectors, and it went up big time. And then once it comes to the top, and then when this is at the bottom, you move your money back and into normal stocks, and it went up big time again. So when you think something is very, very crazy, you will move your money to some other sectors. Um, to call it a day like that. So for example, if I go to finviz.com, you will see how money flows like that. This is a little bit advanced, but I just want to let you know how professional usually do it. Okay. So let's go to maps. So, like for example, you will see today most of the stocks that has been beating down is your overvalued stock that has been going up big time. Like a lot of semiconductors who's been going up big time, like the world never seen before, like we talk about. And yeah, like your Tesla, your Amazon, your things like that. It's been going up big time. So the money kind of flow into other sectors, like what sectors? Let's see. The money flows into sectors like your Lily, okay? On our YouTube channel, we talk about Lily there. Money flows into sectors that's beating down a little bit, like your, yeah, energy sectors, definitely. And a little bit of your MasterCard and your Visa card there as well. So how do you know which sectors is usually flow into? You have to like think, you have to be like, go to 1 year kind of performance. You kind of think it a little bit. You can see the one in 1 year time, the one that is very green is like Nvidia. The one is super green is like Apple. Super green is like Google, like super green Amazon. Super green is like, a lot of this going on there. Healthcare is also, let's see. Yeah, so a lot of these are the super green one. So let's do one more time. In the past 6 months, for example. Yeah, the one that's super green one is like that. So money usually flow from one to another. So, oops. Money usually flow from one to another. So it flows really from a lot of these sectors to flowing through a lot of these sectors. So if your portfolio is down a little bit, and it's absolutely fine. Everyone in the world portfolio is kind of down at the moment. You can see this is today's portfolio. Money is really flowing to like Oxy, to like Lilly, to like Berkshire Hathaway, Lockheed Martin, Mastercard, a little bit of Uber, a bit of Netflix. And while some other sectors are in the red, let's see which one is in the red. Yeah, this is what LHX. This is a defensive sectors. This is Oxy Petroleum. This is Berkshire, LMT. This is Lockheed Martin. Your VUAG is on the red. Your CNXZ is on the red. Your Netflix should be positive. Your Tesla on the red. Your Reddit is on the reds as well. Kind of flowing from one to another, which is very normal. Oxy Lily MERTX. Yeah, and then this is the one that's on the red. Okay, so yeah, which is very very normal, but eventually things kind of go up kind of big time as well. Okay, so just to I don't so what I'm trying to say here is that um there is a kind of like a let's see, how do you know which sectors is gonna flow into, okay, and things like that. How do you know that? Let me just think. How can we talk about it? So first of all, you want to look at the one that has the lowest historical PE ratio. Yeah, you kind of flow in the one that's the lowest historical PE ratio. If I go into like groups, and then in these groups, if I click like charts, for example, yeah, you click like charts, you see that the one that's going up big time, they're going crazy. Like the one that's going up big time so far is like, let's see, like your technology is going up big time like that, and stuff like that. So they are a little bit overvalued a little bit. Okay. So changing them into another sectors is it's kind of fine. And let's see, okay. Let me just put it in a really, really nice way. Like, for example, last year, when Trump increased the tariffs in 2025 April, in March, guess which sectors did the best last year when he increases the tariff? Hmm, let's have a look. So, if I go back into that time, hopefully this one has more years. Mm, let's see. Okay, Trading View is going to give it to me. So let's open that up. A little bit of sectors rotation, a little bit there. Let's just open it up. Let's click full charts. So what we're going to do, I'm going to go into, just to show you, well, let's go to 1 week. Yeah. Um, Usually the whole thing will comes down together, but let's see carefully which ones come down. Okay, so this is 2025. This is discretionary sectors. This is like your Tesla. This is like your Apple discretionary, like something people buy because of fun. Okay, because they have extra money. So that's what um Yep. So discretionary sectors, okay, the extra money, your Tesla, your cars, and stuff like that. So discretionary, when the tariffs came down, think this guy kind of came down as well, okay, when they imposed the tariffs, yeah. And the next one we've got is consumer staple, okay. Consumer staple is like, let's have a look. When was it? Yeah. So that's here March. It went down a little bit, then down as well, okay. That's good. That's like your staples. It's like your tobacco. It's like some of your stocks that is groceries. Healthcare, for example, uh, if you look at it carefully, last year's as well, it also went down like that. Let's see, March. So everything comes down. Industrial, when Trump was announcing the tariffs here, industrial also came down. This is like your Boeing. Information technology, obviously, it's going to come down. These are your technology sectors. Real estate sectors, when we announced the tariffs, this guy also came down. You can see there, like that. And communication sectors also came down like that. Okay. This is like your Facebook. Utility sectors, when tariffs came down, announced, it also came down like that. What is this? Financial sectors also came down when the tariffs is announced. We call it a Liberation Day. Energy sectors is probably the only guy that did not come down. Okay, let's go energy sectors. So if I show you properly on 1 year, in 1 year, so it came down a little bit then. Let's see. So this is November and then March. Okay, this is when the tariffs happened. Tariff. Yeah, energy sector is the only thing that didn't come down. The reason why it came down here, because a lot of the sectors kind of bottom already. So if you put your money, let's say from technology sectors to energy sectors, you'll be happy for a bit. And then once you're happy for a bit, it's like reaching the resistance line, and investor take the money out from energy sectors, they put it back into your technology sector. So technologies will kind of bottom out just in the 3rd of April then, and went up big time. Same thing here happened in Iran war. So if you look at Iran war, last time, January time going up big time, while every other sectors was coming down, and all the way to 31st of March, okay, when we reach crazy extreme fear. If you look at here, yeah, at the bottom here, 30th of March, we reached 6 on the extreme fear. And what happened? Yeah, it just came down, swap from technology, sorry, swap from energy to technology back. So technology went up big time, while this coming down big time. So right now, okay, if you think the technology sectors is going to to come down a little bit, the AI sectors and all of that sectors can come down. Look, it's not going to come down like that. Something has to break. So you have to look at the company's earnings. So you have to go to the market screener very rigorously every day. Look at which earning guidance is already came down. If the earning guidance came down, if one technology sectors on the AI came down, ding 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 ding, the whole thing is going to come down. So we're just waiting for companies. You have to start from one company showing some broken signs first, okay? Then energy sectors is gonna come in, and usually it will come back up again. And once it come back up, you swap your money again, okay? Let me show you one more time. This is a bit advanced. This is what normally the hedge funds, what the institution is doing. Yeah, yeah. So because they normally don't put the cash just like that, they always make their cash to work for them like that. Yeah. If I show you another one, for example, almost every single crash. So if I choose another one, the technology one, the last crash we've got, let's see when is the next extreme fear again, or extreme greed. Let's see. So the last crash that we have is 2025 and how about 2024? Nothing 2024. 2023, okay? 2023 in around 3rd of August. Can you see here? When extreme greed here. You can see the blue line, 80 is extreme greed. We haven't reached that yet. Now it's around 64. So when we reach around 80, which is the extreme greed, usually there will be a market coming down a little bit. So that is happen then. This is July to 26th of July 2023. So let's see. This might be new for a lot of you, but let's just accept it. All I'm trying to explain is money is always flowing from one sectors to another. So for example, at that time, okay, at that time, when we reach June time, for example, you can see this July time, 2023 is July time. Okay, you can see that. And when S&P 500 went down, that means the technology went down, the discretionary went down, the healthcare went down, the financial sectors went down. All of the sectors that we went down, okay, you see it go down. Okay, the red line is S&P 500. So when it went down, usually one sectors will do well. And what sectors that is? So let's see, this is starting from July time. So you can see from July time, 2023, these sectors, which is the energy sector, is going to do well until the resistance line. And when it reaches a resistance line, it call it the day, it sell out a lot of the money, and then it put it back to our technology stocks. So you can see smart money sometimes, usually they flow from one to another. So you have to be like, where is the money going in? Okay, where is the money going into? Okay, so that is kind of what happened. So if you're on our Telegram group, a lot of money actually flow into defensive sectors as well. We talk about defensive sectors. There are three defensive sectors. The first defensive sectors is like what your Lockheed Martin. And let's see. Yeah, Lockheed Martin was up 1.5%. So Lockheed Martin, what happened here is that this is a fighting. This is like a defensive sector. So it's been going up big time, and up to when the Iran war starts, things started to come back down. We call it buy the rumors and sell the news. So it's going up big time. As soon as the Iran war starts, it came back down. It's always like that. World War One is like that. World War Two is like that. It's only buying through the rumors then. Okay, so it went back down big time. So right now we are the same price as we were before the Iran war, 5th of January, and it was same price as, like 5 years ago. Very, very similar price, Lockheed Martin. And the reason why I decided to talk about this, or we decided to get into this like yesterday on Telegram, is because for our apprentices is because of there's also a Trump budget. We have 1 trillion Trump budget on the defense. So you always want to have a catalyst. Write it down. Whenever you want to buy something, you kind of want to have a catalyst. Okay. So if you want to get into certain stocks, you want to know the reason why you want to get into certain. So you want to have a catalyst. Okay. A catalyst is the reason. So one of the reasons, as soon as the valuation is very good, it came down quite cheap. The PE ratio was very low. Seasonality, let's see what the season will be like on that. Lockheed as well. Mm, May, June, a little bit. It's okay. It's not the best, but it's okay as long as it's not going down massively. So hence I say doing an extreme field will be nice there as well. Yeah, you can add a little bit in £50, £100, whatever that is. If it comes back down red, okay, if it comes back down red, and there's also a budget with Trump's as well. So yeah, there's a 1 trillion budget trying to build the Golden Dome, okay? Trying to prevent missiles from coming to the US. So not just Lockheed, RH, what's that called? L3H? Yep. L3H Harris Technologies as well. Basically, you want to buy the one that is the earning guidance that's going up. So you have to pull out the whole sectors. You pull out the whole sectors, and this is like Lockheed Martin, L3 Harris Technologies, Northrop, all of that. So let me help you to use via AI. Okay. For apprentices, we teach you how to use via AI. So you basically tell, Trump has, let's say, has one 1 trillion budget on defense, I think. So which stocks will do well or bad? But that's just joking. But the proper way to do it, the proper way to do it is this. So you say, okay, give me all the defense sectors, okay? The defense sector stocks, okay? And yeah, and their most recent earning guidance or outlook. All right. So that's what happened. So and you choose the one that is the has the highest, the earning guidance is going up, all right, rather than coming down. So you choose, all right? Out of so many defensive stocks we've got, tell me which earning sectors is doing well and which is doing bad. Okay, let's wait. Anyway, so that is kind of what happened then. So if you look at his Lockheed is just reaffirming. So it's the same, reaffirming. So it should grow 5 to 25% year over year. That year over year 5 to 25 is quite nice. Northrop reaffirming as well. RTX it raised the guidance. GD is raised the guidance. BA raised the guidance. LTH raised the guidance. KTOX is raised the guidance. Leonardo raised the guidance. And so, yeah, raise full year guidance. What else? Raise a little bit guidance. So if you just do the one that's raised the guidance, your life could be quite easy, especially when the PE ratio of that guy is quite low. Yeah. So because there's so many, so it's crazy. So yeah, you choose the one that's the lowest PE ratio, and you choose the one that raised the guidance usually. So let's have a look one by one, okay? Lockheed Martin, we talked about just now. It went up how much today? Let's see. It went up 1.6% today. And the next one will be Northrop, okay? Northrop Grumman. It went up 1.89% today. Let's see. Let's click it. Wow, it's crazy. Yeah, it's been coming down big time. And it went to the same place that it was like some time ago. Oh, everything is very similar. This went down after Iran war, basically. What else have we got? RTX. So RTX is at 0.6% today. We've got GD. You can see the one that is not falling big time. It went up a little bit there. GD. I'll say if you close your eyes and you buy any of that, the whole sectors is quite, the whole ETFs is fine. General Dynamics, let's have a look. General Dynamics. This is okay, up 1%, kind of like that today. And Boeing, I didn't know Boeing do things like that. Boeing is mainly airplane, so you remove that. Sometimes AI is not reliable. Yeah, so you have to use strategies as well, like mentors. L3 Harris, we talked about just now. This guy went up, like 2.3%, just like that. Raise the guidance. You want to see the guidance has raised big time. Okay. There are some guidance raised tiny bit. There are some guidance has raised big time. Kratos, let's have a look. Kratos is okay. And Leonardo. And the list goes on. Leonardo up 3.6%. Raise guidance here as well. Positive, strong margin expansion. Margin expansion is a very, very good thing. Yeah. Write that down. Margin expansion is probably the most important thing out of so many, many things. Yeah. Because if you have 1% of increase of margin expansion, it can be sometimes even 100% of revenue increase equivalent to. That's insane. Yeah. It's crazy. Textron, let's have a look. Because margin expansion is like taking more home. What else have we got? Finsantiari. Let's see this. This is a naval thing. Can't find them. And the list goes on and on and on. BAE. This is a UK thing. Let's see. When you choose the sectors, we are choosing the sectors of the same country usually. GE Aerospace. Let's see what's that. Okay, cool. So yeah, for here we've got RHX. There is a R3X. We've got RTX here. We've got what is this? RHX. RHX. Yeah, there's LH Harry's here as well. Yeah. The one that guidance increases big time basically using our week 4 training strategies. Yeah. So that's kind of what happened. And money flow a little bit like that as well from that sectors to some energy sectors. You can do the energy sectors. If I do energy sectors, if you buy the whole ETFs, it's very difficult for you to lose money. Okay, you might not make money immediately, but over time you're going to make money as long as you're not using crazy leverage. Like these energy sectors, if you do the whole ETFs coming back up like that, if the things comes down, you'll be fine. Yeah, at least your money is kind of working a little bit. Okay, so that's kind of what happened just right there and then. Okay, so in order for things to crack, you want to wait for companies to show that they are actually cracking individually. If the companies is not, then things is still gonna come up really nicely. Usually we will start taking positions out when we are an extreme greed stage of the economy, or when it reach, you know, when something that's resistant, always like the resistance like that, something is always like that. Okay, when it reaches there a little bit, taking them out a little bit there is fine. But if you see things that is always trending up like that with no sky, no moon, no resistance, is always going out like a rocket, chances are their guidance is increasing 100%, 200%, 300%. And things like that, you can just let it go to the moon and never come down. You will only come down when the guidance decreases, okay? Or you can, take a little bit, a little bit, a little bit like that. Yeah. So that's kind of what happened. If you have index, you never want to sell them. Okay. So that is kind of what happened just then. Yeah. So let's continue. Mm, what is this? This is the Bitcoin things. This is an AIM. Yeah, AIM when it's at the top, that means you want to start taking a lot of, start taking some risky position out. Remember, money make is always in the waiting. Money make in trading and investing is in the waiting. Yeah. Yeah. Money in trading and investing is always in the waiting and being patient and waiting for things to come. So let's look at this bearish 33. So no one is it's the lowest that we ever got. The lowest is 29. That's when the crash happened, 30. That's okay. Nothing to talk about there. Yeah, for some reason we are still quite undervalued at the moment. So maybe there's still somewhere to go. Let's look at our SP 500 forward PE ratio just to see how things is right now. So we're still not at crazy all-time high 22. We're still at, what's this? This is April. This is May last year. Yeah, things are. What is this? The reasons why the P is not going to all-time high because our earnings are doing really, really well. We're gonna go to the earnings later. Cool. So this is just to refresh you a little bit about week 1 training, a little bit about the sector kind of like rotations a little bit for apprentices. Cool. Now we're gonna go to individual stocks now while I look at some of your questions if you've got. If any questions, just type on the chat box. We're going to be there for you. Let's see. If I'm a semiconductor, I should never sell if the price. Okay, let me read properly. Hi, should we buy Celebras on 14 when it's IPO? Chris is asking. We have an IPO strategy. This is the IPO strategy. The IPO strategy is usually when it launches, it's like that, and then it went up, and then it come back big time. Okay, so that's the IPO strategy. Launches is always come up in the first few hours, okay, because people are coming in, and then a lot of people who bought it before the IPO, they will sell all their shares, they will unload all their shares, and it will normally drop big time before it go to the moon. Okay, so the way to buy IPO is come right at the bottom here. No matter what you talk about, Airbnb, whatever that is, snowflakes, um everything is like that because it's very normal. It's very normal because some people already bought it before the IPO. So they are holding for a long time. They cannot wait to sell them. So as soon as it's IPO, they will sell them at a really nice price and then it will drop big time. And then retail traders come and buy it back when it's dropped 50% of its price and then it went up to the moon. Chris, well done. Lakshmana, I mean, long time. So far, is it good to buy CEO bought 2 mil? CEO only buy 2 mil, okay? CEO has so much money, they only bought 2 mil. That's crazy if you just think about it. Only buy 2 mil. Quite crazy. So in order for you to buy SoFi, you want to make sure the earning guidance is improving. Let's look at the earning guidance of SoFi right now. Give me the past, most recent earning guidance or outlook for SoFi. Okay, we'll come back to that. Let's go to the next one. When should we close the position on Wing stock? When do you close a position on Wing stock? When you see a volume peak like that, okay? Volume peak or you check the season. If you're shorting it, you kind of take your money if you see some kind of drag or stop a little bit, take your money. If I'm semiconductors, AI ETF, I should never sell, even if the prices fall. Um, um, you can dollar cost averaging a little bit and then put it into another sectors a little bit if it is crazily overvalued. So how do we know something is crazily overvalued? Mark Minerva or William O'Neill or a lot of people, this technical analysis guy, what they do, they put a moving average line or simple moving average of 10, 20, 30. As long as it's very far away from the moving average, we call it the day. Let me show you an example. So if I show you an example of, let's put a moving average here. Yeah, let's do this. Okay, your trend line, etc. So it comes out really, really nicely, very nicely, very nicely, very nicely. As long as it's very much away from that, they call it the day. Okay, very, very much further away like that, very, very much further away from the beautiful line, they call it the day. They trim their positions out a little bit. Okay, like for example, this could be things like. Yeah, but if you have a long-term solution, if you have a long-term situation and you don't mind that things is gonna come down a little bit, then you're fine. For RuPaul, you can hold them. If I'm gonna give you things like India, for example. Yeah. So that's India. So, you went, okay, let's change the numbers to make it stick really nicely. Yeah, something like that. Okay. So you kind of stick quite nicely there, like 20, you kind of stick nicely, bounce, bounce, bounce. When it's too far away, you'll be like, what's going on? So let's see. I'm gonna put Bollinger Bands right there. Yeah, when it's too far away from the band, and you take it a little bit then. But if you ask me properly, when I will be looking to take profits onto certain sectors, if the guidance is improving big time, if you are on, if the guidance is improving, let me tell you something. At the end of the day, okay, a few years from now, a few months from now, whatever, a few years from now, arguably, what's gonna happen here is that the stock market is just gonna have two sectors. Okay, the stock market is just gonna have two sectors. Okay, at the end of the day, the first sectors is the AI sectors because everything is gonna AI is gonna have such a high efficiency. We have like maybe some robotic sectors, so some technology sectors, and all of that. You're gonna be these sectors is gonna be so big, it's gonna be so crazy. Okay, at the end of the day, and the rest of the sectors is gonna be so small. Yeah. So at the end of the day, because this has such a big this has such a big productivity. This has such a big output. Yeah. So at the end of the day, that's what's going to happen. So maybe it's going to happen now, but at the end of the day, it's like for many, many years ago, 50 years ago, 100 years ago, financial sectors used to be so big. Okay. Oil and gas sectors used to be so big. And suddenly technology used to be so small. And then suddenly technologies get so big now, the rest of the sectors get so small. So yeah. So if you think something is going well and nice and you're fine. Yeah. So that's kind of what happened. So what's the point? The point here is that money is not really made in the buying, money is not really made in the selling, money is actually made in the waiting. Yeah. Crazy. Cool. So now yeah. And how do you decide and what if there's a crash? Yes, there will be a kind of crash and stuff like that. But a better thing to do is during that time you just add more because at the end of the day, if you wait for a few months, you will go back up again. Okay, so that's kind of what happened. I still think this year we're gonna have a crazy, crazy crash of, that feels like a bear market because of like today we have some inflation data coming out. Let's look at the inflation data. Let's go to investing.com and you look at the economic calendar. What's going on? Let's see. So we have this inflation today. We are expecting to be 3.7. It was 3.8. If you zoom it in, a lot of them is due to the energy sectors going so high and used cars and stuff like that. 0.3, 0.4, 2.7, 2.8. So it went up a little bit. So yeah, it went out a little bit, and let's see the rest of the data and see how things is gonna go. The EU, for example, the EU bank is saying that this year they might want to hike their rates, their interest rate. So your mortgage is gonna go up this year for the EU zone. You go to poly markets, you're gonna know this. So on this, we like to look at the interest rate. Let's look at the interest rate. Let's have a look. EC rates high. So ECB is euro, whatever that is, interest rate high. So they are saying that, what's going to happen? 82% of the time, they are 25% increase their interest rate in June. Is it going to happen in July? Probably yes, probably no. 50-50. Is it going to happen the next later? I think they are thinking about this. Maybe there's 1, 2, or 3 times going on, like more interest rate. So when the market when they raise interest rate, that means they don't want people to borrow money. So it's good to borrow money now. So if they raise interest rate, they don't want people to borrow money. So if they don't want people to borrow money, that means people cannot buy stocks anymore. So the stocks usually, downturn a little bit. But let's see what's the new Fed gonna do. This is for ECB. What about the US? US is still doing nothing there. Okay. Okay. Cool. So that is kind of what happened just then. What were we talking about? Okay, answering questions. So that's what happened. Okay, but if you have leverage stocks, you can come off some of your leverage stocks. Does this follow sector rotation theory? Yep. It's just mainly you never stay cash and you move from one sector to another. How do you know we are close to another extreme fear? Um, because it's kind of always happened then, and we have a new Fed kind of coming in soon as well. Once technology comes out, what is the next sector's area to put into? Good question. Mustard, we got new. So sectors we should move into the other sector. Should I move the Tesla stock when it starts to move? Can you check RBKL stock? Space engineering went up 2.4% today. Mm, if you just have very, very small left, very, very small money left, and you just put in a little bit, then you don't really have to move. Yeah, you just stay where you are, and you're fine. Tesla is kind of like a yeah. If Tesla gets to around 480, the resistance line, then you can move your money a little bit. Now Tesla is like 4440, so you might go to 480, 500, and you can take a little bit out. Yeah, but Tesla is a robotic. It might go to the moon. Can you check our KLB space engineering? Cool. So let's go back to this SoFi. So if you look at SoFi, people asking whether should buy SoFi. Net adjusted 30 over year, EBITDA 30%, margin 12 to 13%. Let me see. Past most recent earning guidance. It's not really giving me 29. So before the full year was what? 4.655, 4.655. So it was similar, I think. 1.6 bill, 1.6 bill, 0.6, 0.6. Yeah, probably very similar for SoFi. And as long as the guidance increases, then will be a nice time to get into um SoFi. What happened to SoFi today? Let's see. Yeah, doing that today. Mm, waiting for the guidance to raise. Right now, the guidance is kind of maintaining from what we see here. Strong initial maintain. Yeah, compare properly. I don't think so. This is giving me the right number. RBKL. Okay, do the same for RKLB. Since money flow on sectors, do we sell sectors ETF or keep like if it is too complicated, you can just keep where you are. Okay. Can we use unless it's super, super, super overvalue. But we are not an extreme greed yet. So, you know, can we use to find companies where the margin expansion has increased? Mm, maybe you can. You can try. Do. So you got what? Philip, Valero, Marathon, Sandy, Storage. Nice. All of this probably went up. Why do you say forward P/E ratio when it says the actual date of the time, if you understand what I mean? Nice. Forward means PE ratio means this. Okay, PE means the price of the stock, Apple 200, maybe 300, divided by the earnings in a year. So when I say forward means rather than taking the earnings in a year that's already gone, that's already in the past, if I use forward earnings means I'm looking at the earnings for the next year. Okay, we call it the next year EPS. So that's the meaning of forward. It's a little bit more accurate than just PE ratio itself. There seems to be a big talk about SoFi technology, app, and Nvidia bought some shares. Also, CEO bought shares back. How do we decide? If you want, you can put £50 into it on your ISA. Can I take profit now? United Health I've been holding since last extreme fear. Well done, Evelyn, making a lot of money. How much have you made percentage wise on United Health? So let's look at United Health. Now, we don't want to take money out when you are making money. That's not how we make money here. Okay. When money is coming in, you make a lot of money on United Health, when business is going up big time like that, you don't want to take your money out. Okay. You want to let it flow. So how do you know when you take your money out? First, United Health is finally doing their buybacks. They stopped their buybacks for such a long time, and they're finally doing it. So if you're not buying it, they are buying back their own shares. Second, United Health finally have an increase in their guidance. They've been dropping their guidance in the past many, many quarters. They finally have an increase in their guidance. So you only want to sell something when the guidance decreases. Let's look at United Health. So let's have a look. RBKL revenue guidance was on the midpoint. What is this? So they sign something here, they black lock a little bit here, they do all that. If yeah, so Neil, very well done. So if it is increases, you can buy them at the extreme field time, okay, or Rocket Lab. Yeah, do a presentation and tell me what is Rocket Lab and why should we buy them and who is their competitors. So the next one we got UNH. Let's have a look. So yeah, UNH you can see on what is it on more than 439. What is this? Release on 21st of April, Q1. Okay, so they should make it very easy to read, isn't it? It's not really easy to read. Okay, let me make it very easy to read. Give me the past 8 earning guidance outlook of UNH sequentially, please. Yeah, let's have a look what's going on here. So you see, they expect to repurchase 2 billion of their shares by the end of Q2. Just understand what it meant. Just understand this, write that down. Most of the time, when companies release their buyback, they don't give you a time when they're gonna buy. They just say, you know what, we launch a new buyback plan, and they never ever tell you when they're gonna buy. Like Netflix, they say they're gonna buy back 5 billion worth of their shares, and they never tell you when they're gonna buy. It can be 5 years from now, it can be 10 years from now. So stock never really move a lot. But this guy, it tells you specifically I'm gonna buy it back in the next 3 months. That by the end of Q2, we are on Q1 now. So that means in the next 3 months, UNH will buy back 2 billion pound of their shares, not pound, sorry, dollar of their shares. That's quite crazy, isn't it? Anyway, and if you look at it historically, no companies actually tell you specifically like that. Okay, very, very rare. Literally so rare. So let's look at the guidance as well. So in the past, if you look at it carefully, full year was 16. What is it? Yeah, they raised their earning outlook. Okay, they raised their guidance. They not drop their guidance. They did not maintain their guidance. They raised their guidance. Used to be 16. Now is what? 18. So this is 2. 2 minus 16. How much is that? It's now what percent is this? 10%. 10% times 4, guys. This is only 1 quarter. Okay, actually, it's a full year. So, okay, 12%. That's quite okay. Yeah, as long as that increase. But before that, you can see they are always been not so good. Let's have a look in the past. Because you want to compare this like a salary, isn't it? So if you compare it like a salary, you can see before that it was maintaining their salary. Salary is the same. Narrow their salary, decrease their salary. Affirm, same salary. Big guidance cut. I'm going to cut your salary. Lower your salary. Raise, okay, Q3 raise salary, the stock did went up at that time. And then later on, they say issue cautious, cautious about your salary. And then finally, the recent one is a raise of salary. So that's kind of what happened. Yeah. So UNH is a very bullish stocks. There is no need to take profits on UNH. Yeah, your United Heath. You can take profit maybe you're gonna think about what to buy. Okay, if you take profit and get into apprenticeship, then I will say congratulations. That's a really, really good thing. Let's look at the next one because you are putting in yourself. Now let's look at the next one right now. Um, what's the next question we've got? So that's Evelyn making big money on UNH. Well done. Anne is asking, how do you think about investing in the space industry, which is currently not profitable? If you want to invest in space, you want to make sure the guidance is increases. I think Amazon is fine during extreme field time. Crazy, that's what's it? Crazy, the biggest sectors will be AI and robotics. It's very, very crazy. There will be watches for this week. Haven't made any trades yet. Well, let's see. Good evening. Sorry, I'm late. Can you zoom in a bit? Awesome. So that is kind of what happened then. Yeah, that's kind of what happened. So let's continue our story. So where am I? Mm, cool. Let's look at market screener right now. A lot of you might not understand this. This is a week four training. We're gonna go through one by one just to see what's happening right now. So you go on here, click news, you click, what is it? You click markets, you click news, and then you click companies. And on the topics, you click equity. And remember, in order for you to know what happened to the economy, guys, you have to read individual companies. You need to read what companies is telling you. Life is about bottom up analysis. The bottom is your stocks. A lot of people think life is about top down. Your economy is going to affect your stocks. Actually, no, not really. Your stocks actually going to affect the whole industry. The whole industry is going to affect your whole economy. It is your stock that come up with AI. It is your Nvidia that come up with AI that create the whole AI boom or whole AI bubble. It's not your AI come out and then everything becomes AI. No, it's your Nvidia comes out first, the first AI, open AI, all of that. And then the whole world becomes AI. So one stock comes out first. So your job actually is to go and find that one stock by reading things crazily on market screen now. Yeah, let's have a look. Obviously, we're going to look at guidance decreases just to see what's going on. Maybe we can go to, yep, like that first. Mm. So as I said many times, this was like the boring part of the training. But when you drive a car, initially it gets very, very excited. But once you start driving, you'll be like, wow, you can even, make up when you're driving the car and things like that, isn't it? So what was I saying? So yeah, that's what happened here. Okay, let's read. Zoom, let's click on that. Conflict impact, North Media narrow. We're going to open all of them basically and do it one by one. This is the week four training. You might not understand this if you are new. We're basically looking at which companies are reducing their salary, or we are reading companies to tell us what's going on with the economy right now. If the stock is going to go up or is the stock going to come down from here. That's about that. Yeah. Mm, technology. This is waste management. WM. Fusion, Zoom, University Electric reiterates. You open all of them basically. Or which one to open? You open all of them. I don't usually open the Japanese one. Because the guidance is a bit weird. Yeah, if you found it already, let me know down in the chat box. What should we buy and what should we sell as part of your homework? Oh, what happened? I go to page 2 and the whole thing gone. That's crazy. Look, I go to page 2 and the whole thing gone. Pretty insane, if you ask me. Can we save it? What's going on here? All right, let's do the country. How come? Let's refresh. Anyway, let's do this. Zoom, let's have a look. Zoom reduced their workforce, shifted. This is sales, marketing, and things like that. The company announced 20% reduction. Revenue was below the consensus. Lower their full year guidance, which is now below. So yeah, Zoom lowered their full year guidance. So that's about that. That's a pre-on. This is 12th of May. I don't really avoid trading Japanese stock. I love Japanese stocks, you know. I just saying that their guidance is you have to make sure you increase their guidance big time, 500%, 300%, in order for you to buy them big time. Yeah. Japanese stocks are beautiful stocks. I own some of them. They're very beautiful. North Media, narrows their guidance. Full year guidance was 133, before was 133. Full year financial guidance 75, 75. Very similar, very similar. I'm gonna remove that. This is a news and media. Paramount source lower by 50 million to a range of 1 to 1.1 million. Revise. This is natural gas focused energy. Increase their production. Capital expenditure. This is how much money they spend. So it's a good thing that they reduce their okay. This is a good news for energy sectors actually. So Paramount Resources is a natural gas, company. So they release their earnings right now, today, that they are going to make a record earnings. Record means they're going to make money like you never seen before, so much in the history of their salary. And because of that, you will see that the stock should go to all-time high. Okay? Because it's a record earnings. Never seen before, the stock should go up to all-time high. Paramount increased their first half production, so they're gonna increase more production, result in, cited outperformance expected earlier, lower their expenditure. So really, really good companies. Nothing not to like about this. Paramount Resources. Let's have a look. So, okay, it's like this. So if this can keep going higher and higher, your Occidental Petroleum should go up, your energy sectors things should go up like that. If it comes up, continue like that. Can you see after the Iran war, 31st of March, energy sectors came down a little bit, and then now it's continuing to come up a little bit when there's no deal on the Iran, and energy continues to go up. Wow, it's crazy, it's going crazy now. Paramount Resources can go here. So if this guy is gonna go to all-time high here, some other stocks should go to all-time highs as well. Your energy sectors, your Oxy Petroleum, your buying a little bit of Occidental Petroleum right now is not the worst situation in the world on your ISA accounts as well. If you want to swap your money a little bit, swap your positions a little bit here and there. Let's see what's Oxy doing. So we make a lot of money before on Oxy. We bought in like just here and then, and it went up big time. And then after the Iran war finishes, and then it came back down, ceasefire and things like that. Today, you're the same position as before the war. The thing that we saw just now is already went all-time high just now. Paramount, the Canada oil and gas company we saw just now, it went all-time high. Maybe this might go to all-time high, maybe not. But this is like a hedge, it's like a hedge for energy sectors. If you talk about buying energy sectors, probably this is it. If the war finishes, this is probably gonna come down. Yeah. Trump is in China right now, so maybe he's not gonna have any anything to do with oil at the moment. So that's Paramount Resources. That's interesting. So you can see by reading this, you kind of know what energy sector is doing right now. You can see, if one energy sector is doing good, the whole energy sectors, when they release their earnings, they're probably gonna do well later on. Yeah. Same thing with like AI. When one AI companies do well, you see the whole bunch of AI companies started to do well. When one AI company started to do bad, a whole bunch of AI companies started to do bad. So it's really from the bottom up, one companies that changes everything. Yeah. Because it is very similar. It's very similar, the whole industry like that. Let's look at done tax. Lower the forecast, expect all of that. -1, now is 0. Okay. Under Armour, it is a footwear company and stuff like that. Look, when Under Armour dropped like that, used to be people. Fast is an analyst. Analyst is expecting them to be 0.23. This guy came down half of what we expect the salary to be. And obviously, this guy's gonna come down big time. And when this guy come down big time, chances are your Lululemon might come down big time. Your peers, Under Armour, let's look. So Under Armour was like down like what, 17% like that, you know, coming down like that. You want to know the reason why? And maybe your Lululemon is gonna come down. If it hasn't come down, maybe it's gonna come down eventually. Yeah, your Lululemon, your all of that thing, you know, very sad. Under Armour is a clothing company. Saunders International. Can we short that? We need to look at the earning guidance. So, okay, let's look. Give me the past 8 quarter most recent earning guidance of Under Armour. Potentially, okay. Saunders International. This is a New Zealand company. Probably can't find them. WW Technology. Expect to decline by a low single digit sequentially from the first quarter. This is like a cannabis, so it's okay. Zoom, we're talking about Zoom just now. So the full year reaffirmed the EPS. For the revenue, they dropped from 1.25 to 1.19, so they dropped. What is this company? Zoom Info. Is it Zoom? It's not Zoom. It's not Zoom. It's not Zoom. KNS. It's a German company. Guidance, not so optimistic. Slightly lower. Slightly lower is fine. We want to be big low. What is this on the German company? Revenue expect to grow up to 4%. Outlook expected to be 85. You have to compare between the previous one. This is a New Zealand company. Don't think so you can do this. Petra Diamonds suspend full year production. Didn't really say anything. Zoyotis. Okay, let's have a look. This is an animal healthcare products. They sell animal stuff. Animal health products up 3 but falling short. Let's look at the guidance. Competition in the dermatology. Treatment dogs. Maintains pocket of growth. There's no guidance. Okay, this one. Lower their full year targets and now forecasts. 9.68 adjusted. So we need to know what happened before. So let's find out what is this number before. So we look at Under Armour just now. So it was declining revenue. Last time was also declining 4%. Better than previous outlook of 4 to 5 decline. Gross margin declined about 190. Adjusted operating was 110, previous 95. What about down low single digit? partly offset by low single digit. Margin expected to rise. Adjusted operating income guided to 140. Adjusted EPS 0.08. Used to be 0.1. It dropped. This is what? 140. So you're comparing between this and this. So let's see. Revenue down low double digit to decline low double digit to decline 10%, decline 5%, decline 6%, decline 4%, decline 4%, slightly declining. Let me see what's this. Under Armour. It's declining, but the stock is going up. It's crazy. So something is more important here. So October time went up big time. February went up like that. Wow. It looks like there's a support line. Yeah, just there. Yeah. In order to buy them, you want the earning guidance to increase big time. So the earning guidance is not really increasing. The earning guidance is using different comparison. So the gross margin was increasing. The rest was just, yeah. Bearish, disappointing sales, declining EPS week, stock sold off sharply. It's okay. It's okay. It's okay. I might come back to that. Where are we? American healthcare. This is interesting. Coinbase. Coinbase is about Bitcoin prices. Cool. Let's carry on the rest. How do I do the rest of the topics? Topics. Click equity. Click corporate finance, and then click guidance decrease. I can't even go to page 2. Look, I go to page 2, the whole thing gone. Okay, good. So you have to click next rather than page 2. Claros, let's open that. Let's open that. Planet Fitness. Whirlpool. You basically open all of them. And you're trying to read what's going on with the economy. And then so far we didn't really read any like technology stocks coming down. We didn't really read any like that. We didn't really say, oh, semiconductors coming down. We didn't really read anything like that. Oh, this is 3, 4. Okay, that's what we done the other day. We done Shopify. You went down. We see that already. Cool. This last week. Cool. So let's finish this and let's see if we can find anything going up big time. So Norwegian. This is a cruise line. Low end of the guidance and anticipate a prolonged turnaround. Yeah. When the war finishes, this is might be gonna go up again. This is for Norwegian Cruise Line. IETT. Expect 36 in total, expect operating margin 12. Provided earnings for the report initiating full as a result. At the end of the session, I will tell you what to buy and what to sell. ITT initiating. This is quite neutral. We didn't really see what happened in the past. You want to compare salary now and salary before. Art electronics lower forecast because it's a more cautious. From how much to how much? 8 from 8, 9 to 8. Wow, there's a drop in here. This is a market gaming, PlayStation, Xbox, and all of that. Net booking, operating margin, helped by lower launch spending. Let's short this guy. It's not down massively, but there we go. Mel is saying you're making 3,000 on your Berkshire Hathaway. Well done for buying that. You can continue to hold them to the resistance line. You don't have to sell them. We only sell things in extreme like greed. Before coming down, can we count without hitting extreme greed? I guess a massive event with this exception, but I'm reading it normal. Rob is asking, do we always go from greed to extreme greed before coming down to fear? Or can it come down? Yeah, it can come down without hitting it. But it would be nice to hit the extreme greed so that we can like, so people are really, really getting going in big time. What is this? Electronic arts. Yep. So reducing net booking, lower that forecast. So that's what happened. Flutter shares rise despite guidance cut. This is a sports betting account. Flower.com. Just talk about how Flowers is doing. Okay. Expect to revenue decline by 10% compared to previous year. Yeah. Let's short this guy if we can find this company. So let's see the date. It's a bit sideways too much. Otherwise, we will short this. Ternaris. This is still oil and gas. They might go up. This oil and gas company. Planet Fitness. We are looking for expectations. So 3 compared to 3. So it's an increase. Oh, let's look at Planet Fitness again. History. Let's look at Planet Fitness. Where's Planet Fitness? We can buy this, I think. Planet Fitness is on Thursday as a fitness tempered is full expectation because of fewer than expected member addition. Planet Fitness now expect a full year to increase 4% compared to previous guidance that called it increase to 9%. So increase not so much anymore. We are looking for the full year to be 1.45 compared to 3. Oh, they actually cut quite a lot. System is now packed. The same quarter this year is slower. Solid. You anticipate much sharpening. Yeah. Can potentially short this guy actually. Whirlpool home appliances. So they decrease their what? They slash their earning per share forecast from 7 to 3. That's crazy. And short this guy. So almost 100% decrease of their salary. Imagine if your salary from 70,000 a year change to 3,000, 30,000 a year, you're gonna be quite crazy, isn't it? Forecast below is previous. Industry. Suspend its dividend. Wow. Accelerate debt pay down more than. So they used to promise to give the dividend and then they don't give dividend. Falling sales, debt equity. So a lot of students already showed it on the 7th of May. Okay. Let's get Whirlpool because that's where the things announced. So 7th of May when they decrease their thing big times. Yeah, just around there. It's coming down nicely then. Crazy this guy. Yeah. So from 70,000 a year to 30,000 a year their salary. And then they stop giving dividends as well. Okay. That's a short. We'll talk about some buying at the end later. Just looking for anything else. On the planet. Gillette. Expect 30 from 29. So that's very similar. Clarus. Previous was 255, now 245. This is a outdoor lifestyle thing. Okay. And Zoetis. Do the same for Zoetis. Do the same for Zoetis, which is the animal company. All right, let's look at the things that's doing well. These are all the things that's doing bad. When we look at it, there's nothing much. He's talking about Zoom Info, guidance drop a little bit here. Electronic Arts, guidance also drop a little bit. This is like PlayStations and stuff. People are not buying PlayStation because they buy AI stuff, maybe. Film lower. Whirlpool. Yeah, these are the shorts. The buy, if you really, really want to do it, but it depends on whether there's a oil and stuff like that. I think energy sectors is fine, if you find any energy ETFs, they are fine doing it a little bit. And yeah, you oxy a little bit, £10, £20, £50 is fine. If you want to buy, buy a little bit of Lockheed, we talk about that a little bit, is fine. £50, £30. But the best thing to do is to wait for an extreme fear to make it big. Let's look at some guidance that increase big time. Okay. So let's just AI to help us here. So here, financial. So we've done the decrease. Let's do increase as well. Increase is going to be everyone, everyone is going to increase big time. Where's the margin? Expansion, yeah. So let's read a little bit. We have all these food doing well, next power. Zebra, apply material. This is a memory demand. If you own any memory stocks. Siemens Energy. All this doing well. Let's go to the next one. Even Monday was doing well. Lincoln, profit taking hits. Well. Compass. These are all the one that's doing well. Akamai going crazy. Sony. Where's other companies? A lot of things are not here. Where's HIMS and hers? Guidance increase. Literally not here. Let's change the country to US only and see what happens. Zebra. Wow, how come HIMS is not here? To the page one. Page one. It's the same. Live 360. Let's get this. Oh, HIMS is here. HIMS is from this country. Provide earning guidance, raises earning guidance. Okay. Anyone found anything that increased that double? That the salary double here? Let me know if you found it. So we can buy it together. So let's go. Initial guidance 280. Previous is 290. Increase a little bit. That's okay. HIMS and hers. Revenue 680. We need to know what happened before. This nothing saying nothing. So let's read this. It surprise loss on Monday. Telehealth companies shift towards this weight loss thingy. Pressure is margin and domestic sales. Shares raises its full year forecast and expectations as a partnership with the Novo. Said this is going to do the weight loss drugs. Expect to return to profits next year. We historically have focused on operating cash flow remain positive. We will return. Annual to be 2.8, compare last time 2.7, just a little bit increase. The forecast is based on another business. The company may not be the first one to sell the peptides. Okay. The guidance was increasing from 2.7 to 2.8. That's okay. That's okay. It's just a very small bit. Live 360. Let's look at these. They raise their guidance from 640 to 650. It's the same. 4 to 5 is the same. Sony. Let's look at Sony. Now this is combining with Taiwan Semiconductors. We can buy Sony actually. Japanese safe and projected stronger on a higher gaming. Say the Friday plan joined to produce next generation image sensors. Sony aim to limit capital expenditure. They are trying to supply image sensor. Has been constrained by its manufacturing. Sony forecasts a 12% jump in net profit, thanks in higher earnings to climb 30% projected, driven by 30%. Sony is a good company actually. Companies operating profit for the business to climb 30%. to yen 600 billion, driven by stronger sales game house. Okay, let's get all the earning quarters for this guy. Zoetis, let's get Zoetis just now. So they cut their guidance for Zoetis from 9.8 to 9.6, a little bit there. The EPS was cut from what? 7 to 76.8. A little bit cut. Okay, a little bit cut. 10% probably. Less than that. So do the same for Sony. See if we can buy Sony. Where are we? Yep, let's get Akamai. Akamai raised the full leaving, raise all of that, lowers his full year, willing to accept. Okay, where should we start? So Akamai is an internet company. Okay, let's see where should we start. We start from the guidance. Lowest is full year guidance from 26 to 26. So it's very similar. Okay. Compass from 10 to 11. That's okay. Let's look at Monday. 356 to 354. That's very similar. You want a big number, guys. So this is the thingy, but where is the one before? So we need to know the one before to compare the salary before. This is applied material. What we're trying to do now is trying to find some companies that's going up big time or going down big time in their money-making ability. Five to 10% above estimate. We need to know the one before. Let's go back to our Sony. Cool. So let's go Sony really from the whatever that is. So Sony, okay, let's really make it so you can see. Some people can't see. So we want to see if there's a increase in salary, isn't it? So let's see. So where should we start? We're gonna start from operating income, all right? Operating income is 1.28 trillion. Operating income, 70. Wow, look at the numbers. There's so many numbers. Sales is 12, operating income 1.6, net income forecast 1.6. So many numbers, guys. Announces 500 billion buyback. Gaming profit arise 30%. It's just a gaming profit. What about the rest? Sony raised continuous guidance. Wow. They need to put it side by side, so we can compare easily. Right now, there's too many numbers. All right, let's do it ourselves. So let's do the manual way that we taught you. Click Sony Investor. So the week 4 training we show you many times. Apprentices should know how to do this. Let's have a look. If apprentices doesn't know how to do this, that means you can book your call. So what we're gonna click? We're gonna click on financial statement. We can click on this financial statement, click on this financial statement. So let's see if they're gonna give us numbers in a beautiful way. Okay. Wow, there's a lot of numbers. We just want what we want. So let me see. They're gonna give us the beautiful numbers. Okay, we're just gonna click like guidance or Outlook. Okay, there's nothing. So where is it? Sanskrit presentation, maybe is here. Let's click on this. May 8. So let's see. This is seen in a very beautiful way. Wow, that's so fast. Okay, this one. So the financial targets, financial targets. We got, what is this? This is not a target. This is a forecast. So Japanese company. So forecast. Okay. Forecast. Wow, that's crazy, isn't it? Forecast. Forecast. Is it? No. Gaming forecast. Mm-hmm. That's the thing about Japanese company. Their guidance, they give you everything. Okay, this is it. Full year result forecast. Like, it's crazy. They do the whole thing for you. Forecast. So you have to see if it's increased like that before. Operating income, all of that. Okay. Okay. So they do it for you. That's what I before. Uh, this is February. This is February. Wow. Let's look at this. This is February year over year. Year over year. Nice. All right. So we're gonna compare two together, all right? Let's see if we get the numbers from. So first number, it says 13.3 trillion. Okay. So you go back there and you find 13.3 trillion. 13.3. Probably this. Let's see. The same date, May 8. F26. It's a -1. And what does it say? It's down -1. Yeah, that's where it comes from, guys. So 12.3 and 12.3. That's a whole year forecast. -1. And you see, you want to see side by side like that, so you understand what they're on about. And then the operating income was 1.6, up 10 to 11. What you do, you go back there. Operating income 1.6, 10 to 11. Yeah, you can see the numbers side by side beautifully. The next one, net income was 1.16 trillion, up 13%. 13%. And the rest is like that. So you know where the numbers comes from now. So it's easy to see now. Sony as a 500 billion buyback. So you compare the one before, which is on 5th of February. And what do we have? So let's open that. Let me open that up. Yeah. You click on presentation, basically click on these, click on that, click on that, click on all of that. And then it was a quarter before, and you find the exact same page. Probably this one. Okay. Is it the same page? Yeah. So the sales was 12. The sales was 12, 1.6, 1.56. This is 13, operating margin, 12. So it's improving, yeah? 1.6, 1.11, 1.5, 1.1. Yeah. Operating 1.6. Cash flow decreased a little bit. Okay. So let's read it really carefully to see what they talk about. Bullish on profit, mix on revenue, margin expansion story, but hardware sales are slowing down. Bullish raise, strong music, imagine sensor. Bullish raise, strong music, slightly bullish. Okay, let's go to stock right now. Sony, so many Sony Group. This is what happened then. So there we go. There's a support line. A lot of our students, because it's quite bullish, things actually improve a little bit on there. The news came out when? Let's see. The Sony news came out on. Where's Sony? Came out on 10. Forecast a 12% jump on the net profit. Operating profit of the business climbed 30%. And 10th of May will just be, where's 10? Just be here. That's kind of what happened. So there we go. There we go. Let's look how the Japan stock's doing. Japan is going to the moon. Okay, Japan is going to the moon. Cool. So let's go through really, really beautifully so you can see. Now, remember, if you want the stock to go to all-time high here, 477, you want to make sure the profit that you are seeing right now for this stock also go back to all-time high. It has to be the highest you've ever seen in your life. So what's that mean? You want to make sure it goes to the highest. So let's see. So that means your salary has got to be the highest. It depends on where's your target. Let's say we're going to buy now, but the question is it going to go to the highest? So you have to look at, is the salary the highest? So let's do it. So previously was 11.7 trillion. Previously was whatever, 12.7 trillion, 12.3 trillion. Okay. And you kind of want to make sure if it is there before 2024, which is here. So you want to make sure, you make more money than the rest of these combined. So your salary right now has to be the highest if you want to go back to all-time high. So let's have a look. 1 time, 2 times, 3 times. Where are we? So it's here. So let's see. So last time was 12.3, 12.7, and then what? 11.7. And this is all trillion. Yeah. So right now it's 12.3 trillion. It's almost very high compared to last time. So what about the rest? Operating income, 1.6 trillion. Have we got 1.6 before? 1.2, 1.3, 1.2. So it's probably the highest. So it might go back to all-time high like that. So how do we do it? This is how you do it. So you want to find the true value of this stock. So we're gonna type it now and type the true value of this stock. Okay, give me the true intrinsic value of this stock now and the next 6 months. Let's have a look. Now, once we've done that, we're going to go to Finviz just to see what's the PE ratio of these stocks is like. This is Sony, yeah? This is Sony who are combining with Taiwan Semiconductors to produce some chips. So that's what happened here. So there's not really a lot of numbers here going on. Okay, not a lot of numbers. That's fine. Let's go back to where we typed just now. So let's see. Is 19, is 23. So right now, in the base intrinsic value, bullish a little bit to 27. 6 months should be 24, around 30. Downside if guidance disappoint. Yep. It's kind of slightly undervalued right now because we are supposed to be 24. We are supposed to be like 23. Now it's around 22 a little bit. For a company. So that means who is our competitors? So what do? They have a buyback going on. They have their gaming going on. They have all these things. So now we're on the last part when we look at is that growth rate. Okay, let's look at their growth rates as well. So now we know they are undervalued. Now we just want to know their growth rate. So the competitors is like your Microsoft, your Disney, your Warner, your Semiconductor, Apple, your Canon, your Netflix. Okay. So if Microsoft is down, this guy is probably gonna be down. If Netflix is down, this guy is probably gonna be down. So they have different companies. If you want the closest full competitor, it will be all that. Okay, that's okay. Okay, what's the growth rate? Let me type it. Because if you want the money to grow, you need to make sure this guy is growing as well. Yeah. So you need to find out the companies. There's a few things you kind of look at. You want to look at obviously what they do, kind of what their sectors is on. Okay. Once you find out their sectors is on, you want to find out the guidance if it is actually increasing big time. You only want to do something that's increasing. Once you do that, you want to know their competitors, so you have a feeling of should you buy this or should you just buy the competitors. Yeah. And once you do that as well, and you want to know whether they are undervalued right now or overvalued right now. And when it's really, really good time to buy, you usually buy during extreme fear time if they are the same sectors as everyone else. So let's have a look. So okay. Cool. So let's read it again one more time on this. So Japanese is set up the plan, joint venture to develop this thing in capital. Yep. So the catalyst will be they are joining with TSMC, okay, which is a semiconductor stuff, to provide this guy. So this will be the catalyst, yeah, with the buyback and stuff like that. So that is kind of what happened for Sony Group companies. Interesting. Cool. So the last part we're going to look at, obviously, is going to about when do we buy it. Okay, let's have a look. So we click on our website just to see when do we do it. Okay, so January is really good, February is really good, March is really good, April is really good, May is kind of there. So June will be really nice. So just all the way there, and you call it a day in July time. You just came back down there and October time. Yeah, so it's an extreme field time for this guy. So that is the interesting part. You can see the whole thing is coming down, but today this guy is jumping up big time. Doing a little bit 50 pound, 100 pound like that, it's not going to be the end of the world. Yeah, it's not going to be the end of the world because they are doing their own share buybacks as well. You can see there's a volume spike here. So if you're not buying, some people are buying as well. Interesting. So that's Sony Group. Okay. slowly grow. So you use some volume spike, you see a lot of that going on. And the safest thing is actually to do it in extreme fear. But in extreme fear time, you might as well just do the one that's gonna go up big time. Cool. Let me continue. Kim, you're welcome. When do you read Market Screener? Do you have a cap on news or in a paid one? Which paid version do you recommend? Any is fine. Apprentice is gonna get it for free. Mel, what do you think about Berkshire? Well done. You can keep that on. So that is kind of what happened here. So yeah, so go on to place it on your if you are new, put it on your practice account so you can see exactly what is going on. Awesome. Hope you guys learned something new today. What do we cover today? We cover the importance of sectors rotation. So that means that if you think a certain sectors is coming down, you don't just sit down there, especially for apprentices. Okay, you don't just sit down there and wait. You move your money to a certain sectors a little bit, and then you move it back fast during extreme field time, step by step, little by little. Yeah, that is kind of what happens. So that things are always always printing. Cool. So that's the first part what we learn. The second part of what we learn is also talking about being disciplined as well. Okay? Being disciplined. What do you mean by being disciplined? That means that do you actually think we are having a rocket at the moment? We have a rocket moment now. Let me show you the rocket that we're having right now. Let's go to 20. Let's do another one for 10. Yeah, we're having a rocket moment at the moment. Okay, really beautiful rocket moment at the moment. So maybe there's some deals that's coming out from China and stuff like that. Okay, let me talk about something that's quite cheap as well. MasterCard is also quite cheap. Okay, MasterCard, Visa also quite cheap. Putting a little bit then is not the end of the world. Let me show you. Why? Let's see. Yeah, your MA, your MasterCard there is okay. Berkshire, some people making big money, nice. Oxy making around 2.7K is also there. Lily's a healthcare sectors. Berkshire, LMT, what's this? Lockheed Martin, 700 pounds just like that. MA, this is your MasterCard, 494 pounds just like that. And UNH a little bit here as well. Some people own them as well. Ooh, 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 ooh. Um, so what's the conclusion? Conclusion, guys, if you do nothing right now, that's absolutely fine. You're just waiting for the right time. The best, easiest time to make money is during extreme field time. Okay. But for apprentices, if you already own, you make a lot of profits already, because you bought during the last extreme field, you make a lot of profits already, and you want to be like, oh, let me balance my portfolio a little bit. Yeah, spending £10, £20, or whatever that you have is any of these, the 4 3 stocks that we talk about is not the end of the world. Okay, but on these shorting stocks, you can do on your practice account and kind of see how things goes. Yeah, that we talk about. So that is kind of what happened just then. Harjinder asking, please tell a little bit about service now. Now, service now, as we talked about the other day, you want the guidance to improve, but the service now guidance is not actually improving. Okay, let's look at service now real quick. Do the same. Give me the past 8 earning guidance of service now. But if you own it, you're absolutely fine. You're gonna make money eventually, but probably not now. So if you look at this carefully, on the 22nd of April, you want their salary to improve, yeah? So if you look at it really, really carefully, their margin wasn't actually improving. Okay, margin is a very important thing, and their margin is just not like, where's the margin? Where's the margin? Okay, ask where is the margin? They didn't put the margin here. revenue guidance, but didn't give operating margin. That's crazy. They miss the margin, guys. So we can't just use AI. You have to use a strategy that we taught you. So if you look at the margin a little bit here, the margin was, what was it? What is the earning outlook? Actually, let's do earning outlook. Earning outlook is much better. What is the past 8 earning most recent quarter earning outlook? Okay, let's see if they're gonna give us the margin here. Let's see what do we have here. Service now. So what's the margin? Are they gonna give us a margin or not? Okay, the margin is here. Okay, the margin used to be 35. Okay, use what? Actual guided around 31. Actual free cash flow up from 35. You really say what it is. Forward guidance, margin guidance. Non-operating guidance 31.5. Reported reduced full year operating margin around 75. Yeah. Okay. Give me the past 8 earning outlook guidance like margin too, please. Yeah, you need to know what you want and you ask him. Basically, AI is not gonna save you. AI is not gonna tell you what stock to buy, but you have to be like, tell them what to do and they save your time a little bit. Okay. So let's see. So the margin up, free cash flow margin 35%, operating margin 35%. Of course, reduce the margin about 75. So they reduce the margin a little bit here. Okay. Margin pressure a little bit. So that's the only problem. The rest was okay, but it's just margin a bit down. So in order for us to buy this, we want the margin to go up. All right. Good question. You want to make sure your salary is going up. When would you sell if you shorted it? When would you sell wing stock if you have shorted it? That's the question. Let's see. Let's see wing stock. You sell them when there is a. Can you see there's a oops, not there. Oops. It's hard, isn't it? Like this. And then like this. So you have to backtest if the volume works first. If the volume doesn't work, that means this guy is not very good. This guy, the volume here is nice. What about the rest? So yeah. So you probably wait for the next support line. If it is like that, like a rocket, beautifully like that, so you can keep trailing it down, trailing it down, trailing it down. But I think this is gonna go to the floor. Yeah. It depends on how much they drop. So let's go back to the one we recommend. So wing stop, where is it? Okay, this is wing stop. So let's read this for a second. So it was low single digit decline. So you calculate how much is it the salary right now compared to the past. What do you mean? So if the salary right now is 20,000 pound, you compare where was it when I was at 20,000 pound, where is my stock price? Okay, so let's see. Or what age I am at. So let's see. We've got what? SNG 4146. This is spending. So you have to open it all up carefully to see last time when was it? All right. But personally, if there's a volume spike, just be a bit careful a little bit or just throw your stop down a little bit like that. But yeah, and normally I would just wait for till the next earnings or just pay attention if there's any crazy things happen. Yeah. So that's happened. Cool. So Leo say thanks, you're welcome. Time to get to the next level. Alvin, you're welcome. Reshma, you're welcome. Awesome. So that's kind of what happened. Sit tight. And we have a new Fed coming in on the 15th. So let's see what he's gonna say. As you say, inflation is going up slowly right now. If the oil prices keep going high like that, it's crazy. We have RJ, we have Arvin and Anil. Anil, long time. We have Anne, we have Barry, we have Bieber, we have Carlo, we have Deshaun Ishwa, we have Eunice, Evelyn, Godwin, Gratian, congratulations, Gratian, we have Jack, we have James. How have you been, James? Long time. Text me, Sean, Juan, Mudan, Kim, Lakshana, Leo, Lizzie, Louis, Mori, Miki, Muse, Nisha, Nora, Patrick, Paul, Risha, Lake Rock, Susan, Theodore, Vivian, is awesome. Beautiful, Zara. Awesome, everyone. I hope you guys are doing really, really well. If anything, let me know, but I will update you and let you, speak to you very soon. Take care now. You're welcome, Aster, Anu, Harriet, Rick, Jack, and Tio say thank you so much. You're welcome, Kim. Really, really proud. Really, really proud of you guys. See you, see you, see you, see you.